Good day, ladies and gents. How are we all doing? I hope we are all good. So, welcome to chapter 4, order blocks of the book Market Structure and Powerful Setups by WadeFX Setups, Forex Market Price Action. Special shout out to Wade. I'm going to drop his group links in the description and at the end of this video for anyone who want to follow him on his socials. You can stay tuned until the end of the video. So today we are on chapter 4, which is order blocks. So without wasting much of your time, let's get into it. Order blocks or OBs. So on our charts, each time we say OB, just know that that will be an order block. It's just an abbreviation. Order blocks are candles where market makers or banks have placed their positions. Generally, the market returns to those candles and they are never violated if they are the real OBs. So here what the author is simply trying to say is if an order block is a true OB, if it's a strong zone where the market makers are positioned, that means it won't be violated. So there are two types of order blocks, which are the bullish order blocks and the bearish order blocks. The bullish order block. The bullish order block is the last bearish candle before the bullish movement that breaks the market structure higher, represents a high possibility of holding the price when the price returns to it. Right, so let's just mark this one. Then this is an illustration. Okay, so let's just repeat this. The bullish order block is the last bearish candle before the bullish movement that breaks the market structure higher. It represents a high possibility of holding the price when the price returns to it. So before we go into the illustration, what the author simply means here is if you've got a price like this, or let's say this is the last sell candle right here. Okay, that's the last sell candle. Then price starts to push up. So you start getting green candles. Then you actually get your price breaking a structure here. So you get a BMS break of market structure or a BOS. Price continues to push up, breaks that structure. So remember from the previous chapters we've read, we are trying to trade in the direction of the break of the market structure. So as soon as we identify that, okay, we've got one sell candle, which is a bearish candle before the push up, which breaks the structure, that candle there becomes your OB. All right, so now you wait for your price to retrace into your level. Then when price gets in there and you get a nameable candle, that's where you want to take your buys and your stop loss comes below that OB and you are looking for price to continue pushing up, breaking a structure again. So you simply aim for this high here as your TP in anticipation of this trend to continue pushing up. So an illustration from the author, more or less the same thing which I showed you. So your price will be coming, they leave you one sell candle here or one bearish candle, then the price pushes up and breaks a structure. Now you wait for price to retrace into your OB for you to actually take a buy. Right, so I hope that's a clear illustration there. So here's another illustration of a chart. The author is using GBP USD on the 4-hour chart, which is a good time frame to use if you want the higher time frame market structure. So here you see, actually, I think the entries actually started from here because we actually broke this structure by this move. So this here was the last sell candle before the push up. So price actually came into that area. We got a bit of an ugly move here leading up to this. So now price fails to break these lows. You can see price is failing to break the lows. So we've got an SMS on the bottom side. Price continues to create high highs and breaking structures to the left. So continues to push up again. So now we're getting higher lows and higher highs. So as price takes off from here and we break this structure, now we've got a setup which is formed. We can clearly identify that we have an uptrend happening. We've broken a structure. Then the toughest part as a trader is waiting for this price to retrace into this area. That's the hardest part. That's the first hardest part. The second hardest part is this, because usually we enter here. Sometimes our stop losses go below the range, and this price will still come take you out before still continuing in your way. So as a trader, just have patience. For example, here you see we took like 4, 8, 12, about 16 hours for price to come back into this order block. Then from there, we took 4, 8, 12, 16, 20 hours for the actual buy setup to actually form. So all this patience, I think that's where most of traders kind of lose it. And if you lack patience, maybe trading might not be for you. But if you are patient, just know that you are going to get paid. And the holding, let's say you've entered here, your stop loss is below the range and you are buying, the holding part of price to come back to this level to give another BMS, that weight also most traders struggle with that waiting. And these retracements, sometimes they can scare you out of a trade because price might come all the way closer to your entries. But personally, for us, those in my WhatsApp community, they already know how to tackle these pullbacks here. Those are the actual pullbacks which we use for our intraday trades. So remember, the author is doing his analysis on the 4-hour. As a day trader, once I have this zone, I get what is called a bias, which is basically a direction. So as soon as I get a bias, it's now easier for me to look for the same structures on the 1-hour or M15 and be able to take buys within these retracements on the 4-hour time frame. So if you want to join our community, you can also check the description and you see how we actually trade these areas. So the next in line is a bearish order block. The bearish order block is the last bullish candle before the bearish movement that breaks the market structure lower. Represents a high probability of holding the price when the price returns to it. All right, so just a quick structure. So what the author is simply saying, I'm going to repeat, the bearish order block is the last bullish candle. So our price will be coming up. Then we get the last bullish candle. So let me just make this green. The last bullish candle before the bearish order block is the last bullish candle before the bearish movement that breaks the market structure. So our structure is right here. So if price starts to sell from that high and we break that structure there, now that makes this level here a valid order block. So as soon as the structure is broken, BMS, that's what activates this order block to be valid. So now all you do as a trader is to wait for your price to retrace all the way back up, react into that OB, and now we are selling with our stop loss outside the OB, looking forward for price to continue creating another lower low, breaking another structure here. So also if they create another OB here, if we retrace to that OB, we can still continue looking for sales as well. So illustration from the author. Here you see another example. Price came up. We had the last bullish candle before the bearish movement. Then price dropped. We broke a structure, retraced into the OB. That's where we sell from and we hold our trade in anticipation of price to break a structure again or continue to create a lower low. So going to another illustration. Here you see we already have a downtrend which was happening here. So price retraced and we dropped, we broke another structure here, and we left the last sell candle, sorry, the last buy candle before price actually melted down. So soon as we break this structure, that's what makes this order block valid. So now the pain is the waiting until price gets back here. But again, if you understand the previous chapters which we went through, remember there's a chapter when the author says you are trying to trade in the direction of a break of structure. If this is the 4-hour trend, it means within that higher time frame trend, if you go to a smaller time frame, you will be able to identify a small trend happening here, either on the 1-hour or on the M15. That means if you're treating this as a BMS, right? So you've already seen price break your structure here, and you know that we are coming back to retest this area. So you can still be able to now look for a buy here. Why? Because we've broken a structure to the left. You run your fib. This is also a minor order block, but price does not get there. So you can use your fib, get a buy, use a fib, get a buy. When you get back into your order block, you are now in line with your higher time frame trend. Now you take your sell based off that OB. So instead of sitting and waiting, because here you might wait for 2 days for that retracement to form. If you understand the market structure on a smaller time frame, you can still be able to take a trade. So what I'm simply saying here is, yes, we are selling, right? But as price is retracing up into that OB or into that point of interest, this push here also has its own higher highs and higher lows, break of market structures and retracements. So you can still be able to take those trades as long as this main trend is coming from a higher time frame like your 4-hour and above. So I hope that's clear as well. So chapter 5, okay, this was a very small chapter. So we are done with order blocks. Time to jump into the charts. Let's see what we have. Okay, so here we've got price. This is Euro USD. This is the 4-hour chart. Price was pushing up. We had a little bit of a tiny order block there, which was not retested. Then we know we're already in a bullish motion, just looking at this trend as it pushes. So like I said, in that retracement, you can see we've got a small trend, then price continues pushing up. So we get our first BMS here, right there, and this is the order block. Price retraces, taps into our order block, and we take off. Those who follow the strategy I use, we know our safe buys are always when your price closes above the 13 EMA on a point of interest, which in this case was an order block. We also look for any pin bars on or near the 13 EMA, especially above if we are buying to confirm the bias. So that would be a nice entry, stop loss outside the OB. Or depending with how you enter your trades, this would have been your point of interest. Take your buy, TP target, or 1:3, or just trail your profits. All right, let's see if we've got any other visible trend. Okay, yesterday I had this price action. So I want you, okay, on 4-hour, this is not so clear, but if we come to H1, that's where I managed to identify my trend. So on H1, you will see coming from my high, I was beginning to break my structures here. So I had my first drop. My order block is the last buy candle before the drop, which breaks the order block. So in this sell, price did not retrace to the OB, but if you ran your fib from the highest high, could have been this one, could have been this one, to this low and drag it into the future, you would have seen that price actually came and retraced in the 50 and 38.2% fib levels, and then we dropped. So when we got the second drop, so now we've got a trend, right? We're breaking structures, we've got a BMS, We used the fib, the order block did not work. We get another BMS. Okay, so this was yesterday on EU. I was looking for price to retrace. Again, you can see I ran a fib from point A to point B. My price retraced all the way into the 70.5 area. So you can see those were my entries and the price dropped another leg. So the main thing is you want to try to catch these moves as they begin. Because when you catch them a bit late, like for example, today, price might not give you what you want to see. Although here, I would say again, the last sell candle, okay, here the last buy candle was this one. That was our order block. Price almost got there, but didn't quite. Again, here, the last buy candle, that's our order block. So either we will retrace in our fib retracement points, or we'll find resistance on this order block and price will sell from there. Basically, that's how you mark your charts and wait for this setup. So all the tools you read in the book, you want to apply them to look for setups. If something appears, then you can simply take the trade. Here's another example with gold yesterday as well, coming into today. So you can see we set this high on, this was Tuesday. We started to break structures here lightly. Then the cleanest break of structure was this one, right? So after I got that break of structure, where is my order block? My order block is the last bullish candle before the break, which breaks the structure, or before the move, which breaks the structure here. So what I'm anticipating is price to retrace into the last buying candle. So we're just going to use the top part because this candle is too big. Or price is going to retrace into your fib levels. So if you run your fib from the top to the bottom, again, you see price retrace into this level, which was also a broken support, which is now a resistance. So these are all confluences lining up. You've got support and resistance areas. You've got your Fibonacci, you've got your moving averages in there. So those are all confluences. Also, you've got your TDI baseline bounce just to confirm the actual trend which we have. So coming in today, I still have a sell bias, right? Where is my order block? So the last bullish candle before the drop, which broke the structure. So my last bullish candle here is this one, but if you see, I'm actually going to use this one on top. And it's also within this broken support, which is now a resistance. So you see I've got the order block as a point of interest. I've got this zone as a point of interest, and I've got the 50 EMA as a point of interest. So if my price retraces up, I can also run a fib. So after running a fib, I have to wait now to see where my price actually reacts. Right, so right now I want to see like a liquidity sweep above these highs. These are all the things I need, all the information I need as a trader in order to come up with the best setup. In this same area, we also have the 61.2, the 70.5, and slightly above that, we've got the points of interest I just mentioned. So if price comes here and we get a reaction, as long as we don't break this level, then the sell is going to happen. But if this level is broken, that will now be a new BMS and the trend could actually change and start to push up. That's also something you just need to keep in your mind. So I don't think there's anything else to explain. Let's just see, maybe scroll to the left a little bit. Here's another trend here. Okay, so from this high here, we break a structure. The last bullish candle, that's our order block. There is no retest. We drop. Price sort of goes sideways here, goes sideways. Then we eventually break structure with this move. So the last bullish candle, I would use this last candle here as my order block, but there was no immediate retest. Again, either your price will retrace to your OB, or it will retrace to other confluence point of interest like your fib retracement levels. So sometimes you might wait for price on your OB, it doesn't get there, then you might ask yourself, why is the price not getting here? You should just know that when you are applying what you are learning in this book, you want to try and use all the tools you've learned to come up with the best setups. And also try to use your higher time frames like your 4 hour time frame to look for your high probability trades. That way, trading will be a little more exciting for you. So I don't think there's anything else I need to touch on here. I don't see any clean areas where I can explain order blocks on this price. Okay, nothing to use here. So just know if you cannot identify an order block, it means price is most likely either respecting fib retracements levels, or maybe it's respecting fair value gaps, or maybe it's respecting dynamic support and resistance, which in our case will be the moving averages. All right. So I think that's it for me today, guys. Let's just see on this sell here. We broke a structure here. That's the order block. Price does not get there. We break a structure here. This is the order block. Price does not get there. We are retracing into the 13 EMA. We are retracing into fib retracement levels. So if you are to run your fib from point A to point B, you see that the reactions are actually happening right in our points of interest. So that doesn't mean you miss the trade while it's waiting for this OB. This right here is a sign for you to get into this trade. All right. Again, anyway, you see point A and point B, you simply run your fib. Sometimes price will retrace, sometimes it won't. So as price is retracing, it's retracing either to find an OB, to find a fair value gap, to find a dynamic support and resistance, which will most likely be the 13 EMA or the 50 or the 200 or the 800, or it's retracing into a fib level, right? So these are the main points of interest. Each time we're coming up with a setup, these are our main points of interest. Then we can also look at equal highs and equal lows, whereby we will be looking for liquidity sweeps, just like we read in chapter 3. So as a trader, these are the main things you need to know. Each time you open your charts, if there's a trend, identify what the chart is showing you. Are they showing you equal highs, equal lows? Is there order blocks visible? Is there dynamic support and resistance moving averages available? Do you have, if you run your fib, what is price doing on your fib retracement point of interest? Do you have a fair value gap? Once you understand this, trading will become a little bit more easier for you. So that's it for chapter 4. The next chapter is going to be chapter 5. Chapter 5, we're going to be speaking on the daily range. This is one good topic because here we speak on sessions as well, and basic candlestick formations and what to anticipate inside the main candle. So that will be chapter 5. So special shout out to WadeFX Setups for giving us the opportunity to go through this book. It's such an awesome book for both beginners and intermediate traders, even pros. It's simple trading strategy. You just simply have to be patient for trending markets so that you can identify the best setups. So special shout out to WadeFX Setups. If you want to get in touch with him, you can follow him on his Twitter, or you can follow him on his IG at Wade_FX_setups, or you can follow him on his Telegram. I'm also going to drop his link for his Telegram channel on our description just below. So thank you so much if you watched until the end. Let me know if you are still struggling with order blocks. If there's anything you still want me to touch on, I will happily do a part 2 of chapter 4. Enjoy the rest of your day. Good trading.